All right, guys. The next episode on the podcast, I got my co-host Ed Diaz on the mic with me, my finance ninja, my mortgage ninja. Ed, I appreciate you being on, and I wanted to
Thanks, man.
introduce you two guys that we have today. We got BG and Cameron. My buddy BG is a jiu-jitsu practitioner, a day trader as well. So I thought you'd be perfect for this call, BG, considering that we usually love to talk about real estate analytics, the real estate market. And I wanted to bring some guys over that specialize in stocks. You know, my co-host was a stockbroker for many, many years, and I know we'll get into that. But before we start, you know, we were waiting for the mics to warm up a little bit and just talking about current market conditions. I did want to let everybody know that as a disclaimer, none of us here are professionals in this. At least I'm not, and you know, I don't think either of you guys are as well. Right. So everything that we talk about is just for information purposes only. We love watching the market. We love seeing what's going on. And we like to talk about it with people and share it with the community. So we want to get that out of the way. And yeah, from that, Ed, I'll let you take it away.
Yeah, thanks, man, again for having me. And by the way, congratulations on the additional tan. I see you're trying to compete with me, Mister. I just came back from Hawaii vacation. Looking good, man. I like it. I like it. Look, there's so much uncertainty going on out there, right? And I think there's an overdose also of negativity. I think it's important not to get too caught up in this hype. I always go back to the whole premise that every person who's looking to move the needle financially should have their own financial team of people that they
Mhm.
can get on the phone really quick, ask some questions because they trust them and they know that these people have spent many, many years grinding to become professionals at their own in their own fields, right? So that said, look, investing is just like anything. You got to put time into it and you got to do some homework. Great companies are great companies. I remember when Steve Jobs was dying, and the word on the street was always, well, there goes Apple. You know how many people thought that Apple would go out of business because Steve Jobs was dying?
Hmm.
They didn't understand that Steve had smart people put legacy plans in place. He
Right.
already knew he had people in place. He had all the, and plus it takes a village to create that whole kind of legacy. You know, yes, of course, we got to give Steve Jobs a lot of credit. I mean, he's the modern day Edison, as they say, along with Elon Musk. But these guys are smart and they understand that it takes a village. Nobody can be an expert at every single thing. And Apple has always had, you know, best of breed designers, developers. So it's not just Steve Jobs. You got to give credit to all those folks that have been behind the scene that have remained nameless. There's a, you know, and he had Wozniak back in the day. I mean, there's a whole group of people that are responsible for
Right.
this legacy. And so that said, you got to do your homework. You got to be prepared. You got the research companies to find out. You can't just throw a dart. What I see is that, and I understand, look, we're living in times where things are very expensive, especially right now. Inflation has gotten away. Let's just say that. It's the dog that you took off the leash that you thought wouldn't fail. And all of a sudden, that dog that you took off the leash saw another dog and it's beelining towards that dog, and you were hoping that that wouldn't happen. And now you're wishing that you would have put the leash or kept the leash on. That's what I'm talking about when it comes to inflation. And so it's made things a lot more expensive. Therefore, people are having to work harder. They're having to save harder, do less of what's considered quote unquote fun. But at the same time, don't take your eye off the ball, the prize. You still have to invest in yourself. You should still be investing. The best time to invest is always 20 years ago, folks. We're already late to the game the moment you start talking about it. If you're not doing it, you're very late. However, don't let that detract you from investing today, because you can start today and it's never too late. Now, of course, ideally, the best time was 20 years ago, right?
Right.
But the second ideal time is right now. And again, you go out and you hire and interview professionals in fields that you're not an expert so that you can come together as a team and put together a plan. Because guess what? Tomorrow's coming quick. Look how fast the last 5 years has gone. The next 5 years is going to be even faster. Can you believe we're already basically mid-July? Like, what happened to 2022? Man, it's just been a rocket ship, right? And so guess what? Because we know that time's going to fly anyway, you better do something good with it. You better be productive at it. And that means do your research, get your team together, and start small. Here's the other thing too. There's a misconception that you got to start out with lotto money in order to invest. No, you don't. You start small, build and build and build and build, just like anything else. Did you come out of college and get the best job getting paid $500,000 or $1 million a year? No, you have to work your way up. College is no guarantee of any job, number one. Number two, much less a top tier job. You know how many people work at Starbucks after they graduate from college? Because they have to, until they get that really great job. It's the same thing for investing. It's the same thing with life in general. You got to build momentum, and you start with momentum that's why they always use this analogy of the mustard seed, because the mustard seed's the tiniest seed, right? That you start with that and it gets just gigantic. Look at bamboo. Bamboo stays underneath for the longest time. All of a sudden, boom, it takes over all the land that it's planted in. Kind of the same thing when it comes to investing and investing in ourselves. And by the way, speaking of investing, the best thing you can do is invest in knowledge for yourself. Are you reading? Are you soaking up and doing what we call brain trust? Are you arming this greatest tool ever made, which is the brain? Are you arming it with the right nutrition, the right information? That's where it starts. All of us started somewhere. Even the greatest experts ever have made a ton of mistakes. They learn from that, become better versions, and you're always seeing that they read and study, because the greatest thing you can do is always be in the pursuit of mastery.
Yeah. No, thank you for that, man. That's very true. So Brian, I mean, let's chat a little bit more about your company and what you guys do.
Yeah, definitely. So my partner and I, Cameron here, we have a company called the Playmakers League, which is a social club where we talk about different interesting hobbies. It could be all sorts of things, right? One of the topics we'd like to talk about are just different, stocks and different things that are happening within the market, and how news is coming out and affecting certain things, and just kind of giving our own opinion about it, and also just discussing different topics regarding, you know, macro events and so forth.
Okay, nice. And I know you and I have chatted about stocks for a while, and I remember you picking my brain, asking me about if I dabble in these things, and I told you that I don't, and I didn't at that time. I'm a newer guy into stocks. I mean, because I would follow Bloomberg on a daily basis, almost 7 days a week, with respect to real estate. Now, that's not all they talk about, right? They talk a lot about stocks and options. So I was always following what this whole cryptocurrency thing is, shares of Tesla, how they're doing, and so on and so forth. But I never really dabbled in it until 2021, towards the end. That's when I recently, I started a Robinhood account. I got in and I started playing around. Now, the first stocks that I bought were the home stocks, because they're the ones that I'm most familiar with. And I do know that we're significantly underbuilt in the United States. I've seen figures from 2 to 6 million homes underbuilt. So based on that, I was really bullish on buying these home stocks, and this company, Builder, I think the ticker symbol is, which actually services all the builders in the area, right? Like I believe they're based out of Texas, and when you need different materials for building homes, this company provides that to the contractors. So that's another company that I was really interested in as a result. And then I slowly started getting into more of the crypto things. Now, I'm really happy that I started buying crypto once it dropped down. Now, relative today, it was still higher, but when I bought crypto, it was in the mid 30,000 range, and Ethereum was in that mid 2,000 range. It's not like I bought when it was at 60,000, thankfully. But seeing how much it's dropped, and as I mentioned, while we were waiting for the mics to warm up, we were talking about just, the volatility of cryptocurrencies. And for me, that was a big reason why I didn't invest in it to begin with. I'm like, it just jumps up and down like a EKG, right? A reading. And I'm like, that to me doesn't show stability. And so I was really hesitant. Now, I wanted some skin in the game, so I didn't go too crazy into it, but I did invest a little bit and I've lost. But I'm not planning on using this to make money this year. This is a long-term investment for me. All the stocks that I bought, ideally, at least at this point, I want to be able to keep these for the next 5 years and see what happens. Now, we had mentioned how cryptocurrency originally was thought to be a great hedge against inflation. Now, to me, correct me if I'm wrong, BG and Cam, but I noticed that this whole cryptocurrency thing was reflecting very similar to the stock market. As the tech stocks plunged, as did Bitcoin and the other cryptocurrencies. What are your thoughts on that?
Well,
Yeah. Yeah.
For both of you, yeah.
yeah, I mean, thanks for having us, guys. I appreciate you having us on, Nima. I'm a follower on Instagram. I enjoy watching you. I'm an owner of rental properties myself, so I can appreciate what you do. And that's my hedge right now against inflation is all the mortgage debt that I have that's under 4%. I mean, I just couldn't have been more ecstatic about locking that in, right?
Yep.
Finance.
We get excited over that. Yeah. Sorry. Keep going.
Yeah. I mean, my primary home is 2.7, and even my rental properties are sub 4%. And I just couldn't be more excited about that with inflation at 8%. And to Ed's point, the funny thing is earlier is people are so surprised by all this volatility and movement, but they don't sit down to learn and realize that 40% of the United States dollars were printed in the last 2 or 3 years, like of all time. So 40% of the US dollar money supply was printed. And instead of learning and reading and understanding that and learning about the impacts it has on different sectors and how money works in economies, they get all emotional and worked up and surprised rather than saying, why am I surprised? Why is this happening? And sit down and learn why it's happening. So I didn't really pursue actively trading the index markets and futures markets and things like that until I had a solid understanding and I could paper trade them and learn a lot of hard lessons on an account that you can practice with for free. And I think when people sit down and take the time to educate themselves on how all these things work, not only do they learn a lot more, they just get smarter and smarter about the economies of the scale here. And they learn little things like we want to discuss in our room, which is very focused on education, right? Like every time you place a trade, that bank you're trading with instantly sells that information to the algorithms on Wall Street. Okay. And they use that information against you. So once you understand little things like that and why, like the US dollar, you have that pulled up along the futures indexes and things like that, and how those correlate, the more power you have on being able to make smart decisions and trade off of levels and other things that are logical versus your emotion. Because if you trade your emotion and you invest with emotion and you do it with frequency and you do it every day, you will get, you're going to get destroyed. And that's what they want to do. They want to tap into that human emotion aspect and program their computers to harness that power against you. And so that's part of the aim of what we're looking to teach in our room, in our social club, if you will, is really empowering the average consumer and the average person to just learn more about it. And hey, why, if I'm buying this here, what is the guy on the other side of the table doing? Who's selling this to me? Is it a Goldman Sachs? Is it another day trader? How do I think like they're thinking? And how am I going to beat them? And then if you really open your mind that way and learn how those algorithms are programmed and how all this rotation works, then you can just be one step ahead of the game and make logical decisions versus emotional decisions. And I think that very much ties in with crypto is everyone doesn't even understand what it is. They just hear about it and they're jumping right into it. So I didn't know anything about Bitcoin, but I did start reading and learning about NFTs and SHIB. And so I made a 200% run on SHIB just based on reading that first as my first trial with it. I think I took $500 to like 2,500 or something like that. And the amazing.
Is that Shiba Inu?
Yeah, Shiba Inu. And the fascinating thing was I had in my toolbox stop loss orders. So I know I could set a stop loss order for it to automatically sell anytime it dipped below a certain price, right? And what's fascinating is, you know, there's a difference in trading riskier assets like that versus long-term investing versus, you know, day trading and everything else. And you just have to have your goals penned out and in mind. Like I knew Shiba Inu wasn't a long-term investment. So I was like, hey, I'm up 5 times. I'm going to do the logical thing and set my stop at like $2,000. So no matter what, I can't lose, right? Versus people that are just telling themselves and maybe even lying to themselves like, oh, it's going to go to 5 and 10 and 20. And when people start saying that, I kind of got in my head like, okay, what's the opposite of what's really going to happen? Probably it's probably going to come right back down. And, you know, sure enough, it did. So I don't know enough yet about the rest of crypto, but I do think the security features, you know, of the blockchain or what everyone's after, right? That's where your value is, and getting rid of paper banking and things like that. So anyway, those are just some of the things we're trying to touch on in a room, is keeping it a lot more educational and kind of empowering the everyday investor versus, you know, only relying on, you know, a licensed banker or someone else to really control the destiny in their retirement, right? I mean, we all want that personal freedom. So, which is right back to your real estate point, you know, getting that personal financial freedom so you can control your own schedule, right?
I thought that was such a great thing that you had brought up, and I saw me nodding my head. I noticed Ed was nodding his head a lot too about primarily the emotional, taking the emotion out of it, right? There's a lot of companies that I like as well, but I'm not going to go invest in them, right? Because it's just because I like, let's just say, believe in them, whether it's, you know, political, whatever the case may be. It doesn't mean the general masses are going to see it that way, right? So to put that into check. Now, me being such a newbie in this game, I can totally understand where you're coming from. And I think it's you totally hit it spot on. And shout outs to you for refining at the perfect time.
Okay, man,
you did a great
talk
job
about timing. That's why they say timing's everything, man. I mean,
right.
Cameron's the example. But
well, I almost made a big mistake though, right? Like I
Hmm.
was like, oh, we're going to cash out refinance to buy our second rental property, not even realizing that I could have just done a second mortgage at that higher rate, right? And kept my lower rate on the first mortgage. So I was making a huge mistake by trying to refinance the whole kit and caboodle when I should have just done a second mortgage. And I didn't even catch it until like 5 days before closing. And I, thank God, was able to redo everything.
Oh, okay, good.
Second mortgage. But I mean, yeah, you got to learn from those mistakes and really think about, like I said, the opposite of what you're doing and looking at the opposite side of that trade, and realizing this is just a chance of your lifetime and being okay with being wrong. It's okay to make mistakes and fail. It's just, how do you learn from it? How do you not lie to yourself and beat yourself up about it? And if you don't know, who do you ask? Where do you look it up? You know, are you making the effort to look up things that you don't know, or are you just, like you said, driving blind with emotion and you know, I think in the destiny has its hold on you. So
Right.
There's a lot to unpack here, but Cameron, you're spot on. Look, numbers don't lie, right? Emotions are very fickle. They have a tendency to kind of put things out of focus and out of perspective. So numbers don't lie. It's one of the reasons why I'm in the mortgage business. I love it because the numbers don't lie. And you'd be surprised how many people tell me, well, I don't want my mortgage to be higher than what I'm paying in rent. That tells me everything about what you don't know.
right.
That's apples and oranges, completely different. Rent, you have zero. Matter of fact, you have full exposure to taxes. You have no write-offs there. When you're in the mortgage, totally different situation, right? The other piece that I think we need to unpack is I'm going to take it a step further and say you absolutely must fail. You have to fail in life in order to win. There is nobody on this planet, nobody, who's been immune to failure. Not a single person. Going back to Edison, it took him 1,000 tries. 1,000. How many of us would have given up at 5, 6, 7, whatever? 1,000 tries to get that little thing called the light bulb that you turn on every night, to get that puppy right. 1,000 times. You look at Elon Musk. How many times was he ready to go bankrupt? I mean, he was 3 weeks out. People don't know all these stories, right? Because they buy the TMZ version, right, of all the wins, right? But they don't see what actually happened going back. The third piece I want to emphasize in is, like, when you're doing your research, you got to find out, right? Who are these? Just like Nima said, you're not just going to invest just to invest. Find out who's running the company. What if that CEO has been the CEO who's bombed 7 times with the past 7 companies, and
Right.
those companies went bankrupt the last 5? Well, hello, that's not good management. But what if you have some rock star that just got put into CEO position of this new company, but they have a whole history, 20 years of taking companies from $500,000 in revenue to $1 billion, right? You got to look at all this stuff. Who is running it? Because at the end of the day, behind the curtains of all this, folks, is human beings just like you and I. There's no robots running companies, not yet, at least.
Right. I made that huge mistake on emotionally investing in was it EVFM or a reproductive gel company where I didn't realize the executive was so emotionally entrenched in political issues that she wasn't even taking care of the company. And I was just totally blinded by that. And I think I lost 95%. And I'm probably still bag holding it in an account somewhere. But then I realized like I'd made a total assumption when I shouldn't have, that she was looking out for the company and the shareholders first versus her personal vendettas, right? And I got burned, and I deserved to, because I just assumed, rather than making, having a stop loss or writing out some rules for myself and questioning how I could have been wrong, right? So it teaches you a lot when you fail like that.
Yeah, no, that's absolutely true. And that happens to a lot of people. The other question you have to ask yourself is, why are you investing in this company? Why?
Mm-hmm.
What's the tie, right? What is it? What's your goal? People just, again, they buy the hype.
Right.
A lot of people.
Yeah. To me,
and
there's
we've all done it, right?
Yeah.
I bought the hype too.
You got to define your goals. If you don't have goals defined, like my kids' 529 college accounts, I started them during COVID. They got a good return, but I'm not going to keep dumping money into them if I can't use it all for your college education. But I feel like when people are trading stocks or certain options, they're trying to get rich fast, or they're just trying to invest because people say to invest and it'll pay off later, when there's other avenues, if they would just take the time to learn how to use them, to do much better. And for me, that was trading the futures markets and index options, which have tax benefits. And I started trading them without even knowing what the tax benefits were. And, just the further you dig into it and the more you learn on how to trade those things, and just all those doors, open for you. But if you don't put in that time and effort, then it's just, you're going to get whacked. You're going to get hurt. Especially if you're blindly following the masses, like you said.
Yeah.
Or you're seeking alpha quant rating like me.
Yeah. Right.
So guys, I have the site up right now, the Playmakers League. It looks pretty cool. So I'm kind of like going through it as we're chatting here. And for somebody like myself, I think out of us 4, I would assume that I have the least amount of knowledge when it comes to trading stocks. So when I'm looking at something like this, how similar is this to, let's say, as I mentioned earlier, Seeking Alpha, which I am, a member of that community?
Brian, you want to take that one?
Yeah. Let me just pull up something one moment. Yeah, just to touch on some points that we brought up earlier regarding crypto and failing. I always believe, for example, failure. I believe failure, you should fail forward, right? You should fail forward. And what I mean by that is, it's okay to lose. It's okay to fail. It's okay. But what's not okay is to fail and not learn, right? Nima knows, being a martial artist like myself, mental is everything. It's true what they say. It's 90% mental. The other 10% is physical, right? And being in martial arts for over 15 years, I definitely have a strong mental fortitude that I've developed and discipline. And it's been helpful to be able to translate that to something as volatile as, options and stocks and things like that. So it's definitely important to, we have a quote we say in martial arts. We say, you either win or you learn, right? You either win or you learn. So I think that's something to keep in mind, Now,
that was my mantra for all competitions. Sorry. Right. That's what I would tell myself every time before competition.
Right. So regarding the crypto we talked about earlier. So, I mean, look, it is very volatile. It is something that, if you're on the wrong side of it, definitely you can get hurt, like, Cameron was saying, and Ed was saying, and if you don't know how it works, you better get educated first. I'm looking at an article here from Forbes that was published June 27th, so just a couple of weeks ago. There was a record of $423 million of outflow from Bitcoin when the market was dropping. That's very significant, and that just goes to show you that when there's blood in the streets, man, people get out. And if you're a long-term investor and you really believe in the company, you would take that as a buying opportunity, right? And that's very significant to see. So regarding the seeking alpha, right? So things that are similar regarding seeking alpha and what we provide, we actually give more of a personalized outlook on the market. Seeking alpha is a little bit more broad, and there's a little bit less, there's education regarding it, but we essentially are doing things. We're not just talking about it, we're actually doing it too. Does that make sense? So we're not holding your hand or telling you what to buy or anything like that. We're not financial advisors. We're not, doing anything like that. We're just giving unbiased, perspective of what we're seeing. We're giving clean cut technical analysis. We're giving daily, and weekly and monthly, charts and levels and supports and resistances and different, things. And we help, like Cameron was mentioning, just empower the average person to know what they're doing, right? We're just trying to simplify this thing and make it, more streamlined for, like you were saying, Nima, yourself, where it's just a big, broad world that you're not familiar with. And we're just trying to make it easier for people to understand. That's all. So.
Right. Now, are you guys giving recommendations as well? You just kind of, because you said, we're not really holding your hand. Are you like, if they have some interest in any specific stocks, are you giving them breakdowns of, hey, this is our forecast is to say, this is going to do this well in the future? Or are you guys just kind of looking at numbers from the past and using that to have them think, hey, do you want to buy this or wait to invest in this specific stock?
Right. So we're never telling anyone to buy this or sell now or do that. We're simply just providing a unbiased outlook of what we see in the short term and long term, and we're not telling anyone, this is, we're basically calling it for what it is, right? We're like the eyes in the market, and we're keeping our eyes on the market so you don't have to, in a way, right? You can tap back in, read our literature, our commentary, and see if that aligns with what your beliefs are, and you can make your decision based off of that.
Now, do you cover stock in a certain sectors? What's the format of how you deliver this unbiased information? Do you pick a certain stocks that you guys just like, or is it, how are you configuring your delivery of the stocks that you cover, and how do you pick them?
We go start with macro and go to micro, right? So we always start with, what do you do first thing in the morning? You might get up, read the news, make your coffee, right? So we'll look at, well, the first thing that's open are the futures markets that tell you what's going on overnight. And that's not just in the indexes, which most people don't even understand what the 4 basic indexes are. And if you can start with that and what futures are trading based off that, there's no complicated formula to what they are. You just need to understand that they're speculation and probability of what they think the indexes in the US will open up at the next day. That's all the futures are. It's that simple. And you can look at commodity futures, which trade all night as well. Oil, gas, wheat, things like that. And you could start simple there because it teaches you and trains your brain. Hey, why is money flowing, out of the US dollar and into oil, driving the price up, right? And it's not just a simple supply and demand. And then when you train your brain that way to start macro and look at those levels, and how money flows, then you can worry about getting into the micro on those stocks, right? So within this certain sector, after indexes, you can look at all the ETFs of all the sectors. So you can, again, see money is flowing out of energy and into financials. Oh, well, that makes sense why the Dow is up then. And, the RUT is down. And you can start making all those correlations. And then we kind of make the commentary to help you tie that together throughout the day and the week, right? And really train your brain to start thinking from the macro level down to the micro. And then it's like, okay, well, no wonder Tesla's dumping, because everyone is more focused on dividend paying oil stocks right now because their long-term goals are to get dividend income, right? Just like we want in our 401ks and our long-term wealth building. For me, my goals are much more short-term. I just like to make X amount a day trading more risky index options, but to me, they're less risky because I understand how the indexes flow into and out of each other. So I think that's where we kind of train it down into. And then based on the interest in those individual sectors, like, okay, yeah, what's the biggest mover of the day? Why isn't anything moving? Why are we just stuck? Talk a lot about seasonality. Like, hey, why are Wednesdays statistically the choppiest days that the algorithms, don't allow much to move? Why do things pick back up in the fall and so forth, and how you can position yourself? So I think, to answer your question simply, is start at the macro, deliver on the micro. And then we do get a lot of DMs and questions and things like that where, people are asking for more advice and stuff. That we kind of keep generalized. So we more of just respond with like, well, this is what I did. What would you have done based on these parameters, right? So it's kind of more of that mental coaching and thought process coaching versus being, financial analyst, if you will.
I see. Hey, thanks for that breakdown. That helps me really understand it
Yeah,
better.
that helps a lot, because I wanted just to kind of get the format, because you're right, BG. I mean, these other formats, I looked at the other one really quickly, and it just seems it's the same old kind of cookie cutter. Not to demean them or anything. It's very generic, right? Just it's good for the conveyor belt, right? It's very assembly line kind of delivery.
Yeah, I'm going to add to what Cameron was saying and a little bit more answering your question, Nima. We also do have live news sources, like, for example, Twitter reposts, different things like that, so people are up to date and getting, live coverage throughout the day, regarding, let's say, the war in Ukraine, or regarding something that Elon Musk did again, So that's something that, Alpha, I don't believe, covers. And there's a couple other features that we provide too. So
Cool. How does one engage you guys there? Just a membership? Go to the website and just click on become a member?
Yeah. On Zoom. Yeah. I mean, you just go on the website, you become a member. I mean, it's more about just covering the investment of our time and the educational processes you're giving and helping us reinvest in educational products. That's really the main goal. It's not to, a for-profit service to become, uber rich and buy financial freedom, but it is so that we can create a community of knowledge sharing, right? Where it's peer-to-peer learning versus, the old school boring, textbook learning, which for some of us that works great, if you can look some things up quickly. But I think we can all agree that like education is one of those areas that's going to be revolutionized, right? Like you might not want to spend $100,000 a year to go to college in the future. So we're kind of trying to be on the forefront of that and saying, you know what, this is an area where people don't know a lot, but they shouldn't be afraid to jump in and learn from other peers, right? But also we can protect them in a way because, we can say, don't make these big mistakes because you are going up against some of the most powerful people and systems in the world, right?
Particularly micro traders.
Yeah. I mean, the markets just aren't forgiving. Markets being bent, just like people have learned in crypto. I mean, they just got the buzz of it and people lost a lot, upended their whole lives. But a lot of people, their lives changed because, they're just being aggressive at the right time and saying, you know what, I've hit my goals. I've had them defined. I've had enough. And so, that's kind of our ultimate end goal there, I guess, if you will, is to really just grow a community of learning and an ultimate resource so that, and we learn things from people too all the time. I've actually learned the most of my trading strategies, investment strategies, just from other people providing their perspective.
That's the beauty of the community. And I think that that's something very unique that you guys have to offer when you're saying that people can DM you and there's a community built into it. Look, at the end of the day, that's really what this is about. And that's what's going to change the educational system too. Because the flow and access of information has been the greatest in human history. I mean, we're learning more on our own by joining these kind of forums than I can tell you I was ever taught in formal education, right?
Oh yeah, absolutely.
Well, and that's what ties into the Great Resignation, all these other things. I mean, I don't think it has anything to do with, people aren't grateful what they have. They just want freedom. They want to learn more, and they don't want to get rich quick, but they want to live a good life and, do other things. And I come from a family of corporate executives and other things. And even some of the people I work with in corporate America, it just blows my mind how closed-minded they are about salary, job. Everyone should be grateful to work here. And, people are kind of fed up with that old corporate America strategy, right? Because you're just not taken care of. You're making them uber rich, right? Can't really take care of yourself. So what is it? I forget what the saying is. It's like 6 or 7 is the average income streams you need to become independently wealthy and have financial freedom with your time, I think. And that's pretty hard. I mean, I'm like maybe halfway there, but to get to 7 or 8, that's not easy.
That's a lot. Yeah. That is a lot.
Yeah, I haven't heard that before. It looks like I got some work to do.
Yeah, I forget where I read it, but it was like, hey, the average millionaire has, 6 or 7 streams of income, whether it's passive or active, like a salary and rental properties and dividend income and trading and other things. So
yeah. Interesting. Okay.
Well, the good news is that it's easier to do that again today
Right.
than it was in the past, right?
And I mean, I feel like we're so grateful for the technology that we have during the pandemic. I mean, geez, how much like Zoom, right, and all these like ways of to be connected helped us get through that. I mean, I'm just imagining if that would have happened 20, 30 years ago, and just how much more challenging that would be, right? We were able to still, right, have our streaming services, for example. I mean, it was still difficult, don't get me wrong, but with technology these days, man, it really came through. And speaking of technology, we all know our beloved tech stocks, our beloved pandemic stocks here in the area, especially since we're all based in Silicon Valley, right, using Zoom, San Jose-based company, and how much growth these tech stocks had. Now, you two stock gurus, can you share with me anything that you guys are eyeing? Cam, I noticed that you had mentioned oil and energy. But it seems like, to me, again, the novice out of us four, it seems like the tech stocks have dropped so much. What's the new thing that's hot? As I mentioned, I predominantly follow the housing stocks. What are you guys seeing right now for, let's say, going into 2022 and 2023? Let me take a guess before you guys get a chance to talk. The first things that would come to my mind is stuff like, I don't know, cobalt, lithium, right? Those essential elements that you need to produce batteries for EV vehicles. And that's what would be my first guess. What are your guys' thoughts on that?
I mean, yeah. Look, I mean, the crypto sector is going to be houses, and then when you get into Ethereum and other precious metals and things, commodities, and more the traditional investments are where everyone's taking their money right now, right? Whether it's, oil, gas, energy. I mean, I went to buy propane the other day, and I couldn't believe how expensive natural gas was and how hard it is to get. When you factor in the Russia crisis and other things, I think you've just got to focus on, okay, well, where should money naturally flow as a safe haven, right? Until people are comfortable enough to get aggressive again, and investing in radical, new frontiers. And that's kind of what Ethereum is to me. It's a good thing. But what if, even though the EV movement's happening, there's still a lot of us that are just loyal to, the gas operated cars for independence, reliability, further range, remote operation, if you will. And the more I studied and read into it, even those electrical batteries, I mean, sometimes it causes more pollution to make them,
totally,
than safe, right?
And those cars are more expensive to acquire.
Yeah. And that was like my first red flag, where I was like, well, wait a second. Yes, it's good we're catching back on that, these emissions, but doesn't make sense. for the long haul. Well, at least right away. I mean, I get, of course we're going there, but I don't know if it's 2025 or if it's 2050, you know?
Yeah.
Yeah.
Yeah, no, I would say probably closer to the 2050, but I think, AI and robotics is going to be huge, medium to long-term play. I mean, the reality is
Right.
that technology is here. You look at Boston Dynamics, what they've been able to do with some of these robots
Yeah.
that can literally leap and go upstairs and downstairs and dance. Like, it's mind-boggling.
Yeah,
And I think
aircraft,
that's coming.
everything. And it's, and AI too, like I got a career in insurance a long time, but it's amazing to me to see everyone in insurance. I mean, that industry is going to be so disrupted. I mean, it's so much data entry and negotiating and relationships, but 99% of it could be automated with AI. I mean,
Completely. You look at companies like Palantir, what
yeah,
they're doing in both the government and private sector, helping companies and governments aggregate information to make better decisions. I mean, you can't fight that, man.
Guys, can you unpack Palantir for me a little bit, please? Because I know about Peter Thiel and his background, both in the area.
And he's one of the investors, yeah.
Yeah, and I read his book as well, but I'm not too familiar about what they do. I believe they're like, was it cybersecurity?
Pretty much, but they aggregate, basically they use big data
Uh-huh.
to help companies and governments, because they have two divisions. One's government and the other's, they started on the government side, and the other one is the private sector, which that's one of the things that makes me really excited for Palantir, the fact that they're just starting to develop the private sector, because they've been mostly public sector and they've done really well there. I mean, they're sitting on a ton of cash. I just think, look, most of these companies and governments make at best half-cocked decisions because of the lack of data. But that if you have one place where you can go get the data and aggregate it all, as opposed to having like a million different systems that you go and check, right? And redundancies or some that are not even that efficient to make it an informed decision. Think about this. If you had personally a portal that you can go to make all of your financial decisions, you had it all aggregated for you. I mean, that's powerful, right? Because people are busy and they're busier. The more things get expensive on planet Earth, the busier people get, because it takes more energy, typically, more hours at work to make up the delta.
right.
And Palantir is like I think they're the only company in that specialty that is doing what they're doing. So there's no competitors. And, speaking at, I'm pulling up a chart for it right now. Relatively speaking, you're a lot better off, at these current prices than it was even 3 months ago or 5 months ago or 6 months ago, relatively speaking, So I definitely, on a risk basis, I think it's a pretty low risk in that sense. And I think it definitely is the future.
Yeah, definitely. If you're going to keep it in long term, that's not a stock that you day trade, folks, in my opinion. But I think if you're going to keep it medium to long term as part of your portfolio, you can't go wrong. The stuff that they're doing and the liquidity that they have, I put up that liquidity up to any company. Besides like Apple, of course, those that are just sitting on a ton of cash. But for a company their size to have that kind of cash position,
Yeah.
and the retention of clients is huge, and the opportunity, the upside on the private sector. Again, I just think, wow.
They're going to be government backed, it's another big force behind them, driving them, right? So
because governments pay too.
Yeah.
I mean, I'm sure they don't have receivable problems with the United States government, right? They might be a little slow, but that money's coming.
Well, on the other side of the perspective to that is, there's a big ethics question here, right? Is how do you deal with controlling big data? How do you use it? How are they transparent about it with people and what data they're collecting? And they do it in a very sneaky way through your iPhone, your legal agreements, and everything else that you agree to. And so I think the biggest barrier to some of this stuff, just something to think about, is, it's the way of the future AI is and data collecting and things like that. But how do you deploy it ethically without hurting people, right? And hurting economies and other nations and things like that. It's just something that I haven't really wrapped my mind around yet, because I don't see, it's just going to be such a strong area for debate on, people have different beliefs and morals and values on what's ethical or not. So
That's a great point, Cameron. And I think to that point, look into companies that's what they do, is
yeah,
deal with the ethical side of social media and also,
perfect. Yep.
technology in
Compliance.
general. Those would be great companies to invest in, because that's going to be an ongoing concern for the rest of humanity. Because
So that, yeah,
everybody has different opinions, like you said.
so
Cameron.
that, yeah, that's where I think the next biggest hot space is compliance. So government compliance, municipal compliance, personal, private and public companies, things like that. I think, there's very few cybersecurity experts out. There's tons of jobs in it. And so I think that whole cybersecurity compliance space is probably the next hottest sector. Just kind of what I'm throwing out there. So who is that?
Another one that I'd recommend too, this is a completely different business model sector, is fintech, actually. You guys familiar with that?
Fintech?
Very
Yeah.
much so. I mean, it's been up and down, but I think there's a huge opportunity there. I agree with you, BG, and I think there's a huge opportunity for new players to come in to
Yeah,
do it better than what the past ones have done, right? Because a lot of them have just been riding on VC money and really haven't done much with it, in my opinion. Besides, hey, pull your credit reports here and we'll analyze it, right? Or do OCR, which is the optical character recognizer of documents and things like that. But on the advice side, using the fintech, I think is lacking in a big way, and it's a great opportunity for some really brilliant minds to come in and use fintech for education and advisory.
Yeah, I'm looking at SoFi as
SoFi being one of them. Yep.
yeah, I think SoFi is definitely going to be a major
One of the
player.
premiers. Yep.
Yeah, man.
Agreed.
So, Mr. Diaz, we mentioned fintech, and I know that you're a tenured lender, an amazing lender. And by the way, guys, an amazing lender who jumps on a call at Sunday night when you got your clients at an open house or interested in buying. Shout outs to you for that.
You know it.
How has this affected your business, Ed? Fintech, has it helped? Has it unhelped? Maybe a little bit of both. Please share.
Yeah, there's two sides of the coin. It's helped in a way because of what I just said, that there's been a lack of real good advice. So when they see somebody like me who is advice based and they didn't get the service or what they thought they were getting there, it makes it better for me as far as market share, right?
Yeah.
Now, I don't have the bandwidth nor the deep pockets to be able to do the volume that they do. So my lane is smaller volume, more hands-on, more advice-based, more education-based, right? So if somebody, it's just like anything else, right? You go to a boutique to get that kind of service. If you want something mass-produced, you go to McDonald's, right? But if you want to get a really great meal that is specific to you and you love it cooked a certain way, and they ask you, how do you like everything cooked, and would you like this side, then you go to a restaurant, right? It's kind of the same analogy.
Yeah.
But there is a place for both. I think one of the things that we've learned is that where fintech was trying to eliminate the personalized service, they realized that humans are humans and we all crave interaction. Matter of fact, the pandemic is a great example of what happens when the human connection is interrupted and people can't go and hang out, and you can't hug, and you can't, go have a beer or go have lunch with someone, that you're stuck at home. You see the kind of social ills that happen, right? And we're seeing the social emotional repercussions of that. Suicides at an all-time high. It's awful, and the amount of mental illness that's going on, and therefore, look at all the companies that are sprouting, and look at how much mental professionals. That's another industry that's a great one to invest in. One, because it's just ethically great, right? To invest in companies that are helping people who need it. I mean, if you had bipolar disease 20, 30 years ago, it was like, get over it. They didn't really put any legitimacy to it, right? But now we realize it's a real thing. And depression is a real thing. It's not just, what, man, go take a walk, go to Pete's, have a cup of coffee, you'll be fine. No. There's some chemistry to this. There's some physiology to this. And we're realizing now that it's not just a mood thing. It's an actual chemistry thing, right?
Yeah, absolutely.
So it's the same thing with these companies, the fintech. I think with time, they'll get better with it, but I just I don't see them replacing the boutique super hands-on. It's you guys, Cameron and BG, what you do compared to the other that we just talked about, right? You guys are more hands-on. People can DM you. There's a ton of value in that, especially because none of us can be experts at everything. That community, guys, and that hands-on feel that we can jump on a Zoom like right now, right? And give that kind of personalized, authentic, human feeling is just irreplaceable, in my opinion. But there is a place for fintech for sure.
Now, I think the same thing when it comes to real estate. I mean, when it comes
Totally.
to real estate, right? The Redfins, Zillow, OfferPad, right? Open Door. These are a few companies that have been trying to marginalize real estate agents and to get more market share. I think that they're so mindful that 17% of America's GDP being tied to the real estate space, and they want a piece of the pie, right? Now, fortunately, what happened with Zillow last year, I have that shit-eating grin on my face, because I love it, I'll be honest with you. Losing $800 million, because you want to back up your Zestimate and say, that's how accurate our Zestimate is, that we're going to go and buy all these homes based on the Zestimate, and they end up flopping, that whole program flopped. And to me, that shows that algorithms can't sell homes. We do, right? And since the 70s, we've had people who have tried to come in this space and disrupt it, and it hasn't happened really yet. Now, there's some people that still stayed around. For example, Redfin and Zillow are much bigger than Help You Sell or Zip Realty, which, by the way, those were for sell by owners. They'd help you with setting up your property right here. Use one of our signs. Here's some disclosures and flat fee services, basically. And they have never been able to really have any type of notable market share, because when you're buying the most important thing of your life, that home, that lending and real estate duo to get you that, it's just much more important, right? There's a lot of other things that we can do online. The pandemic had brought, in my opinion, two great things that I can think of off the top of my head. Number one, the QR code. They finally started using that a lot more, which has been great. I think it's pretty efficient.
You brought it back.
Right? Yeah, exactly. From remember like in 2013, maybe like 10 years ago, there was a little
like bringing back the 80s for music, man.
Yeah, bringing it back, and I think it's efficient. It saves a lot of paper. Hey, great, and sometimes like that Super Bowl ad, it reminds me of the Coinbase ad where it was just a QR code, right? Number two, to your point, Ed, about depression, right? CBT, cognitive behavioral therapy, and other doctor's appointments that we're able to jump on via Zoom now, instead of having to drive over.
Yeah, BetterHelp.com, by the way, is one of them, right? Now they have, that's a company that has 23,000 therapists that you can choose from based on what's going on specifically with you. It's huge.
Right. Yeah. So those have been the great things. Now, Zillow and Redfin, I mean, they're still around, but I'm not really bullish on them being able to do anything really substantial. They're great to browse homes, but when it comes to actually buying and selling, I mean, you really do need that hyper local expert that's able to show you all the comparables, all the numbers, has those relationships, because real estate's a very relationship based,
and it's very nuanced based,
right?
Too.
Yeah. There's I won't name any names, but there's agents that I know that just in 2021, we remember how competitive that space was. I've been able to get offers accepted without being the top offer on multiple accounts, because I've had transactions with these folks before. They know me. We've done business. They just, when you get 24 offers, a listing agent and a seller might sit down and be, well, why should we choose your offer? And I got to sit there and explain why, right? So that's a thing. And I'm so happy to see that, because it just shows how tight knit our group is. And there's been people that have been trying to get, folks like me out of business for close to 50 years now. And they just keep flopping, and I love it.
Yeah, same thing, even more so with the mortgage side. There's a lot of these fintechs a lot of them have gone out of business trying to do the mortgage. They don't realize the massive amount of compliance, and how many people, if you think about from 2008 to now, a mortgage is 4 times more expensive. And most of that is because we've had to create compliance departments filled with people and salaries that are dotting I's and crossing T's 10 times
Yeah.
every time for the same I and the same T, because the
Right.
government says, and waiting periods and all these things, right? It's changed the game tremendously. And people just think that, okay, because I sell insurance to these folks, I should also sell a mortgage to them. And
Yeah.
the other piece is becoming an expert at one thing. See, the more things you try to become an expert at, the more you dilute your value proposition, in my opinion.
That's
This
so
is what
true.
happens with fintech. They think that because they're good at technology, they're good at everything.
Yeah. One-stop shop type of deal. Jack of all trades, master of none. That's so true. I totally agree with you on that. There's so many of them, they spread this on thin. I mean, we've heard of better.com, or I like to call them not so better.com. Haha. And when I'm looking at Housing Wire, my emails, I'm just seeing countless more and more and more layoffs from the mortgage space. And I really think that these are the companies that, going back to the lean startup, right? These weren't lean. They were just throwing everything at it, right? Living on those refis and those new purchase applications. And now a lot of that stuff is dried up and they don't really know what to do, right? I mean, because there's just so much scale. To take that on the real estate side, this reminds me, guys, of so much of those pandemic hotspots, right? Boise, Idaho, Austin, Texas, Sacramento, California, Riverside, Phoenix, right?
Florida.
All of these markets, Florida, the whole state of Florida.
Dude, Orlando, 34% year-to-year growth in price. 34%.
Now, Boise, Idaho, 45% price reduction for all listings. 45%.
Well, I tell you, look, check this out. I have an actual example. My wife's aunt, she bought recently in Boise within the last 2 years. And she bought the lot and then tells, of course, the builder how she wants the little things, right? She bought it. I don't remember. It was like 650, something like that. By the time the house was done, it was already in the eights, and now it's over $1 million.
See, that's unhealthy. That's savagely unhealthy housing market, as my man Logan Motashami, lead analyst on Housing Market, likes to say. It's so true. When you have that much growth, it's just really hard. So anyway, all of those pandemic hotspots in 2020 and 2021, they're seeing the most price reductions and most drops in prices.
Makes sense.
Percentage-wise, right? Because that market was never made there's no value in that, right? I mean, like, you live in Orlando and the prices are that high. I mean, what do you work at Disney, at the theme park? You know what I mean? I mean,
no, what are you? Are you running Disney?
Yeah, right. You know what I mean? Like, it's just the private enterprise is just not there. And during the pandemic, when so many of these employers were so much more open about work from home, hey, just go wherever, and people are like, I got it, I figured it out, I'm going to move to Texas, and you know what I'm saying, I don't have to deal with income taxes. Yeah, how's that working out for you?
Yeah, say hi to the roaches for me, because they're huge.
Yeah.
Hey, by the way, not to disparage Texas, I have my brother-in-law lives there, and there's a place for everything. But you can't just go somewhere again without doing research and finding out, is this place for you?
Yeah,
but I like
10%
I like to bring up with remember with the chairman of the Fed, Greenspan, said what's it called, irrational exuberance. People get way too emotional about stuff.
Yeah,
and they make spot on decisions like that later on that's why we have the existence of this little thing called regret.
And it's tying it back to what BG and Cameron were talking about investing. This is the same thing, right? You see that shiny penny, you go at it, you got to do your research, you got to do your due diligence, right? I mean, if you have property taxes in a state that are close to 8 to 10%, and they go up significantly, uncapped every single year, well, even if you're retired, at least in my state here in California, I know that I'm going to be paying 1% in property taxes. I'm not going to go to buy a $700,000 home and might end up paying 60 to 70 grand a year in property taxes, whether I'm working or not.
Well, it's twisting your arm, telling you to go buy it, you know what I mean? Or buy the stock, or do your research, take the time. If you missed the boat, it's okay. There'll be another one coming,
Yeah, absolutely. Ed said this before. My father said it as well. There's no free lunch. My dad was Nima. Remember, there's no free lunch. You think you're going to outsmart this? Believe me, you're not smarter than everybody else.
There's passive income. There's passive income, which isn't a free lunch, but you're enjoying the fruits of your labor in a passive way. There's creative ways.
Absolutely. Yeah.
The side effects, right? Like that. Because I liked how you had that quote, because when I learned that the real quote was, the jack of all trades is a master of none, but oftentimes better than a master of one, is the full quote. So that I just take that again. And it's just like Ed's comment about the mustard seed, right? One of the smallest seeds, but really the smallest seed in the world is a Peruvian orchid seed. And I learned that from one of my favorite speakers, Bob Goff, because it just changed my mindset about there's always two ways to look at everything, or sometimes maybe even 3 and 4 ways.
Mm-hmm.
And it's like real estate. Like I don't, we bought our second investment property as a condo, right? And it's going to cash flow great, but the HOA fees, it probably wasn't the smartest investment in the end, right? But it works for us on a short-term rental where we can keep it for summers and based on the area, on a coastal town in Michigan. So anyway, I mean, it just looking at all those different perspectives on both sides of the trade, like we were saying, just look at, and what if there's no sides? Like I'm amazed at how many decisions people make, or they engage in these transactions, whether it's real estate, stocks, investments, other things, or crypto, and they have to make a decision, right? And they never add that third column, that is, what happens if I just don't do anything? What if you just don't do anything? And they never put that into their risk analysis, right? They never like, well, what if I just don't buy this property at all? Or what if I don't buy this investment? Or what if I just sit on that cash? Or what if, and they never add that column to their analysis, and they just kind of get lost in this, I either have to, or I don't have to, or.
It's a great point, Cameron. The opportunity cost of doing nothing.
Right. And sometimes it's like, well, yeah, maybe I should wait this out, and about the macroeconomics of it all and get someone else's advice. Because even though I can be a jack of all trades in some regards, like I like to do home projects as a hobby, but I'm not trying to rip out my plumbing and my drain system and all that, because I'm going to hire a professional that I trust to do it. Right.
Right.
So, but, I know how to do that, and I'm willing to learn some of what they're talking about and doing when they're quoting the project, if you will. Anyway, just some perspective there.
The good thoughts, for sure.
Call it patience. PAYTIENCE. Patience.
Patience.
Yes, it takes 20 years to become an overnight success, folks.
Yeah.
On that note, guys, hey, I appreciate you guys all jumping on here. This was great. I mean,
This is great conversation.
Yeah,
Great
I
input,
geek out
guys.
over these things, right? I mean, it's just talking numbers. It's just talking the real estate market, lending, stocks, Once again, I'm going to be checking out your guys' page. I'm going to be seeing what you guys are doing on social media, but it's the Playmakers League. I like the name as a sports nut. So
Yeah, totally.
I'm excited for you guys. And BG, you got to be keeping me up to date about what you guys are doing over here. Okay, I would love to plug this and learn more about it as you guys continue to scale.
Yep. Thank you for the time, guys. Appreciate it.
Yeah, of course, guys. Well, hey, I hope you guys all have a productive week. I'm going to be throwing this on YouTube. Please like, subscribe, and share.
Yes,
yeah.
Sir.
How's the market? So we're on Apple Podcasts as well. And I appreciate you guys all. Hope you guys have a productive week. All right. And then tune in.
Thank you, everybody.
So next week.
Peace.
Cheers.
Bye, everybody.